All right. So good morning, everyone. Hope you had a good morning so far. So what's new? Let's look at the market. So first thing first, we had PPI this morning. So first inflation report before the bigger CPI tomorrow morning. Oh, and here it is. TradingView, come on. There you go. So yeah, this morning we had PPI came in pretty soft, went negative. So pretty good beat. The market is reacting well so far. We saw a big spike right on the news. We're kind of absorbing that spike a bit. And we're retesting the prior highs as well. So let's keep an eye on this area for NQ. So this is NASDAQ, right? So let's take a look on that potential resistance area today. We did confirm kind of the new high right here. So we're making higher highs, right? So we had that high right here. That was a new high. We had that high right here, and now we're creating a new higher high. So market looks good weekly as well. So we have that confirmed weekly reversal pivot that we tried to reclaim last week. We failed. We retested the weekly structure and the reversal pivot this week, and now we're making a new high. So things look good, and we'll need to see how this holds today, and especially with CPI tomorrow, right? So internals still looks good. We had that spike on the credit spreads yesterday. We were rejected at the daily structure and still trading pretty tight in the weekly structure here. So if the market confirmed a move up, we do have some space to drift below that weekly structure. We're not extended yet. Same thing for the VIX. We had that spike in the daily structure yesterday and now trying to follow through down. So very good action and super tight VIX. So yeah, we definitely have some room to the downside as well. Rates still going down. We have Bitcoins looking very constructive here. Last night I was not so sure about that setup anymore because we had kind of that structure retest and kind of a wedge action, kind of bear flag action, and especially if it would have failed right here, maybe it needed more time to kind of create that higher low structure before finding some support. But yeah, right now we're trying to reclaim the daily structure out of that recent range. So very good action on Bitcoin. That might be the only thing that I had today. But yeah, well, let's see if that can hold at the open, and if so, I might engage on Bitcoin here. Okay, so let's look at the full market picture. All right, so market model still on correction. Like I explained last night, we're pretty much at the tipping point of that signal. I think we'll flip uptrend or uptrend attempt right at the open with that PPI reaction, but let's see how it goes. So yeah, price-wise, QQQE reclaimed the daily structure yesterday. closed strong both outside of that inside day and outside of that daily structure. So yeah, it's price wise we did have that reclaim, so it's good. But now let's see if we can break out from that base and range. Right, we have a couple highs, so we have a clear structure right here around 99, 98, 99 ish. So let's see how we react today. Bread should be strong at the open. Price should gap up. So how do we handle that gap up? Do we kind of gap up and crap down tomorrow or today, or we gap up and go, right? That's the ideal scenario. We had that range, we had that base and multi-week and even month consolidation. So I'm not afraid in a gap up and run in that type of market. I'm much more cautious about a gap up and run like we had in May or like we had in July. Those type of gap up and runs or gap up and fade while you're already in the uptrend and a bit extended are usually to be treated with caution and to be a bit more defensive, and you want to trim into those. But that's a completely different story when you get that gap out of a consolidation and out of a base, right? So that's usually kind of the first strength, and you get that breadth trust, you get that potential kind of follow through day, um, and those are sign of strength, not sign of exhaustion. So keep that in mind. Um, but what we need first is to really confirm finally that breadth is with us, right? We didn't confirm that yet. The last few days were green, but pretty weak. We didn't see anything stronger than a 55 GDB rank, so pretty weak. We want to see something stronger than 80 in the 80 in the 90s. That would be kind of the bread trust confirmation that we have a valid breakout. Uh, does it happen today or tomorrow on CPI? I don't know. But I'm just sticking with that idea that the market is breaking out and turning the corner with how the liquid leaders are acting, how the mega caps are acting. And yeah, if the market does not confirm that and just fade instead and goes into distribution, then I'll reassess my view and I'll cut exposure and go more defensive. But right now I have the exposure that I want. I'm playing this anticipation setup and that potential confirmation today, and I remain optimistic. So let's see if we get that hook up today. That would be quite the perfect and best case scenario to confirm that market setup. And yeah, that's what I want to see. So Brett, we are still pretty neutral, still below 50% across the board. So we do have a lot of room to run on the upside. Uh, but same on the downside, right? It goes both ways. So what did I share last night? Uh, Trading View always kind of reset the watch list when you use two computers. So yeah, first setup and kind of went away was Palantir. So we had that wedge breakout from a retest of the support, retest of the 10-week moving average structure. We're now gapping up 3.3%, so it kind of bring it right into the gap fill. I would not engage here. Uh, it's it's basically a place to kind of trim. I have my 2R trim a bit higher from here. So let's see if it goes banana and go crazy today, which my 2R trim will trig. But otherwise, I just plan to be pretty patient with Palantir. Let's see if we get that gap up and go. But I'm also okay if we gap and kind of retest maybe those eyes, retest those that daily structure as well as it's trying to curl back up. Uh, Never expect your stocks to and your positions just to go straight up. It's always nice when it does, but always expect some backfilling, some range building, some natural and LT action. And if you have a red day or you have some retest action, then you know it's normal and you don't panic on this action. Uh, yeah, so I had QBTS, so probably gapping up as well. Oh, not that much. So that was the other one that I was watching for kind of a more spec play. You have a bit like Palantir. We had that big weekly structure retest right here, right at the bottom of the weekly structure as well. And we had that wedge pop 21 DMA reclaim, not quite reclaim the entire daily structure, but that's the setup right here on that daily structure reclaim. Uh, Group is odd, so you have Ionic, which worked well yesterday. You also had Spaghetti Rigetti. So pretty nice setup here. Too wild for me. It's not in my scan, but it was a great setup right here. So yeah, the group is odd. QBTS a bit lagging, to be honest, beyond Ionic and RGTI being kind of the leaders, but still a good setup. EBIT, I talked about this. I will look on the daily structure reclaim. I also have for today WBD, so Warner Bros. We're pretty much right at the base breakout or low cheat base breakout. So we had kind of that larger breakout right here, weekly breakout. We have that pullback right into the weekly structure, higher lows, and now trying to reclaim the 10-week moving average and reclaim that reversal, weekly reversal pivot as well. So yeah, like that setup, and ideally if we can kind of retest the daily structure, retest that DTL, that would give an even better trade and entry. And finally, I had Roblox. So yeah, it was a big leader in April, going sideways, weekly structure pullback, went briefly below the 21 DMA. We reclaimed, we built higher lows right at the 21 DMA, and now we are kind of building that sideaway consolidation. I would look personally for a retest of that reversal pivot. I will look for a retest of the daily structure and create another higher low to engage. It's a bit extended here, so above 1.5 times ATR from the 10-week moving average. So that's why I want to see kind of a small shakeout Small shakeout and retest of the daily structure. And yeah, that was it for the focus list. So PLTR, EBIT, QBTS, WBD, Roblox, and I think I had another one. Oh yeah, GEV, but it's running as well. So GEV was still setting up pretty nicely right here at the 21 DMA. But right now we're gapping up on Oracle earnings. So gapping up above the daily structure, if you're not in that name yet, we're still not that extended in that weekly structure pullback. So look for maybe a gap and retest of the structure, some type of backfill on that gap or in the next few days, and look for a retest here and maybe tight range to set up that next leg higher. So I don't expect it to be kind of complete or fully ready. I was not expecting that gap. But yeah, let's see if it builds sideways, if it needs to back test, or if it just goes straight away. But either way, I think we're a bit extended on the daily to engage there. So that that kind of reinforce a bit how I trade and how I adjusted my trading last year. Uh, and that's a very good example. And it's just over and over and over. You get those market trying to shape up. You get that anticipation signal, and you get some kind of inflation report. You get job reports or FOMC, and the market was shaping up, and everything just gap ups and not give you the entries and low risk entries that you would want if you wait for more confirmation, if you wait for that price breakout, if you wait for that McClellan summation full hook up and reclaim of the 10-day moving average. If you wait for those confirmation, most of the time the market is just already gone, and you don't have those low risk entries in the leading stuff. So that's why you see me, and last week it didn't work. I took a small loss trying to play that anticipation setup. This week it worked, and that's my game. More and more you'll see me do this. I like to open exposure early in the turn on anticipation, because so often you see that market building constructive action, working off support, and then just out of the blue you get a news and everything gaps up and go, and won't allow you to get in the market. So yeah, I think it's important to play a bit on anticipation. If not fully invested or on margin like I am right now, at least have decent exposure just to remove a bit of the FOMO that those kind of events creates. But just remind yourself that the market was setting up. It was not like we were trying to catch a falling knife or catch a downtrend. The market, everything was basing. It was showing LT action. We had that anticipation set up. The QQQE also reclaimed the daily structure. So uh, it was all thought through and based on the system, right? All right, so let's take the first question. So, do you think it's a good idea buying new position when the market is making all-time high, or it's time to build more cushion and then entering in a pullback from all-time high? Cheers from Peru. Nice. So cheers, my friend. So good question, and I kind of just answered with what I just said about playing more on anticipation than trading the breakout. So don't get me wrong. I'm not saying that the market will just revert and go into a pullback. We're just potentially creating that turn for a new uptrend. So obviously there will be uh, more positive action if we do confirm the market uptrend. But if you want very tight risk entries in leading stocks, we're kind of past that. So it's not that you don't have to open exposure when we make a new all-time highs, but just understand that you either engage with a very bad risk reward in the leading stocks, so you have to accept that fact. So maybe play weekly setups with larger stops, smaller size, and expect to have shakeouts and stress test and maybe not have profits right away. Or you can, and that's the other possibilities to play kind of the lagging setups, those setups that are still setting up right now, that might not be pure cycle leaders, but can give you very good returns during that market cycles if they go. So that's really a choice. So either that you go for the liquid leaders, but less ideal risk reward, or you go for those kind of lagging setups that are still setting up. But either way, it's not time to be super aggressive, right? Because we often have those shakeouts, those stress tests as we retest those highs, as we get into prior resistance, right? We talked about that at the start of the session. We're approaching uh, the all-time high on Nasdaq, so we can expect some volatility, maybe some backfilling, some range building, and if you're going all in while we're in here, making a new all-time high, then you're at risk of being shake it out. So that's something to consider. So just to be clear, not a bad idea to engage and open some exposure, but don't go crazy. For my style, I prefer to have already my exposure and to start trimming from here. That's actually my game plan today. Not push exposure. I'm already 120 on margin, and the goal is really to kind of just be patient with what I have and trim into strength as my position reach their 2 hour targets. So she asking, now to our target is based on weekly, not 2 times ATR from 21 EMA. So yeah, that's correct. I changed a bit back to my 2 hour targets mainly because um, that allow me to handle better kind of grind up market. So last cycle I just The market was kind of tired, and market positions were working but didn't give those extensions from 21 DMA, and we're just grinding higher, and I just ended up giving back profits because I was not able to trim into strength due to that. 2R is pretty simple. I can use also automatic limit orders that I punch in as I take the trade. So I don't have to worry about taking a trim. Everything is already set. It's automatic, and will take my trim if it reach the target. So that's easier execution for me. And like I said, it handles the grind up type of markets better. And there's no perfect perfect solution, right? So the 2R the two times ATR extension from the moving average was really great because uh, you adjust kind of your trim based on the stock character and not based on your where you took your entry and the risk you took, because at the end of the day the market does not really care, and the stock won't have best probability or better probabilities to hit your trim just because you had a sloppy entry, right? So it's just about trying to find those R multiples that are within kind of normal market cycle moves, and 2 and 5 R's kind of does that. So I used them last year. It was working well, and that 5R trim usually tend to give a very good chunk of the market cycle move. And 2R is pretty quick, so you can direct your trade and just remove a bit of risk in your portfolio. So that's the goal. All right, guys. So 9:25. Uh, Good luck for today. Once again, let's see how this market open. If we get that bread trust, if we get that McLellan summation hookup, which would be very good confirmation for that potential new market uptrend. I still like what I see. I still think that the market is trying to shape up for a new uptrend. But yeah, let's see what the session tells us and how the market reacts to CPI tomorrow as well. So have a good day, everyone. Take care, and if you still have question, I will be in the pit anyway, as always. So have a good day. Thanks. Bye bye, guys.